So here is everything you need to know about the CPI data report that was released today. What's going on, team? It's Ricky here with TechBud Solutions. I'm going to start sharing my screen so you can see exactly what it is that I'm looking at. I wanted to share with you that even when SQQQ is in the red, meaning that the NASDAQ market is in the green, right? Because this is the inverse ETF, I'm still up $6,800. This all happened, and it was actually caught in my live session today. I live streamed the CPI data report. I'm getting ready to actually trade the reversal. So I actually missed the original reversal. I had to go get my girl some flowers for Valentine's Day. And by the time I came back, this thing was already taking off. But the really great thing about it was I actually let my Learn Plan Profit team know about this reversal forming, allowing them to know, when it was overbought, I did not hesitate to lock in profits. I knew because of the CPI data report being reported at 6.4% of inflation in comparison to the previous of 6.5%, the market had an expectation of 6.2. And I wanted to show you guys this very quickly. I want to get right to it. February 14th, 2023, market expectation was 6.2%. That was the forecast. What was actually reported was 6.4%. So it still came in lower than the previous inflation report at 6.5, but definitely not where we thought we would be. And the reason that this is concerning is because, again, the rate of inflation is not declining, or we're not seeing any more continuous progress at the same rate that we were before. And if inflation, right, we got really close this time. If inflation actually begins to go up, Jerome Powell said it in his last discussion that he will make sure that if inflation data comes in hotter than expected, he will raise rates more than what was already anticipated for 2023. And this is something that he said in his discussion as of last week when he was speaking in Washington, D.C. This is why I believe, and again, I wanted to make this video. And please, if I'm completely wrong, come back to this video and you can call me out for it, right? I'm just sharing my opinion. But just like I did with the unemployment report, I wanted to share with you why I think that the market will correct itself because of what was reported today. So for those that are unaware on how to read these reports, one of the first things that I want to remind you is this CPI data report is all available for you for free, as you can see on the top left-hand corner at bls.gov/CPI. You can go ahead and click on the HTML, and what it shows is that the actual reporting right now is 6.4%. The great thing about this is that it's actually a very simple report to read if you know what you're looking for. It's all these line items that are pretty much being tracked month over month. Is inflation going up or down for food at home, for food away from home, energy commodities, gasoline, fuel, and oil? And all this is tracking is month after month. Once the month completes itself, right? It tracks if inflation is going up or down in those specific line items. That's all it really is, right? So going across the board, you can see that inflation in all these line items pretty much went up in the month of January, which was the one that was reported today, except for 3 line items. And those 3 line items are, as you can see right here, we saw a negative 1.2 points, and that's on fuel oil, if I'm not mistaken. We see a negative 1.9 points, and that's on used cars and trucks. And then on medical care services, we saw a decline of negative 0.7. Everything else saw an increase, and the most concerning one was the one that we saw an increase of 6.7 points, and that was on utility piped gas services. The reason that this is a concern to me is we've seen such a beautiful decline in inflation. We have to give credit where it's due. We went from 9.1%. Now we sit at 6.4%. But every single CPI data report, we were seeing steady drops, some even better than expected, right? Not this one. This was one of the first ones that was really close to being break even. We were at 6.5%. Now we're at 6.4. Yes, it's a decline, but is this not what we talked about last week? And this is my concern. Because of what Jerome Powell said, I think that he's just setting up for an alley-oop. He said that he will raise rates more than what is expected if inflation comes in hotter than expected, because he knows that just like anything, when we start to see a decline, it happens very quickly in the beginning. But then it's now that we're getting closer to the 5 or 6%, the lower 6% inflation rate, that's going to be the harder ones to drop, right? We went from 9.1% and we've seen consistent declines. But the question is, are we going to be able to see more consistent declines now that we sit at 6.4%? I think that just like I explained last week and the week prior, especially if you're part of my LPP team, one of the things that I talked about is I think now is the time where we're going to begin to consolidate, where the next couple of months, we're going to see 1 month come in hotter than expected. And then the month after that, we might come in lower than expected. But it's not going to be the pretty picture that we've seen for the past couple of CPI data reports, where we've seen steady declines month over month with these CPI data reports. And that is my concern. The concern is, well, if we do not see that decline, then the Federal Reserve will justify being more aggressive with future interest rate hikes. And that's where the attention has now shifted. You guys all know that the Federal Reserve has specific dates where they announce interest rate hikes. Are you prepared for the next interest rate hike? The previous interest rate hike, and again, I want to have this all laid out for you guys so you guys can understand. The last interest rate hike was 0.25%. It was one of the lowest ones since March of 2022. Now, because this inflation report came in a little bit hotter than what was expected, it wouldn't be much of a surprise to me if it actually comes in at 0.5%. I don't really think that they could justify a 0.75% because we're not necessarily sitting at 9.1% inflation anymore. But I can see how the Federal Reserve can now justify, instead of doing a 0.25%, going back and trying to be a little bit more hawkish, right? That's the term that they like to use. And then focus on the 0.5% interest rate hike instead of the 0.25% because inflation is not coming down as quickly as expected. Not only just that, but the Federal Reserve still has yet to reduce their balance sheet up to $95 billion every single month. And $30 billion of that is supposed to be of mortgage-backed securities. So if you think that this is the bottom of the market, not knowing that we haven't even really focused or experienced the quantitative tightening to the full degree yet, and knowing that inflation could possibly begin to go up, this is just the concern that I wanted to bring up to you. Not that you need to be scared. I believe that the markets will always eventually recover. My thing that I'm telling you is on this 1 hour time frame, right? If we look at QQQ, we can see this beautiful uptrend pattern since January 6th. We've been struggling to make new highs. I believe because of what was reported today, the market's going to take some time to digest what was just reported. And I think what's to come is going to be more like a wave. I think once, and because the market is so overbought based off of this recent rally, and it's hesitating to pull back, that when it does, it will come quick and it will come hard. That was not what it is, not how I wanted to say it, but well, now we won't forget it, okay? I just wanted to make it a point that I believe because of this CPI data report that it will begin to be challenging, especially if you don't know how to short, right? The thing that I always focus on is it doesn't matter if the market's going up. It doesn't matter if the market's going down. I focus on one thing, and that's market direction. And one thing that I always try to preach to our Learn Plan Profit members is always respect the other side. I don't care if you're a bull. I don't care if you're a bear. But it's understanding current market conditions, and when it's deciding or taking time to decide if the market's going to go up or the market's going to go down, to please make sure that your position size reflects an uncertain direction with the market. So all that means is it doesn't mean that you need to be scared to take a position or to take advantage of opportunities right now as we continue to consolidate. But if direction is unclear or we continue to consolidate within the same range for NASDAQ, then again, just know that we could see a nice pop off or that we could see a nice drop. I'm getting ready for a drop, but I'm going to take it day by day. That doesn't mean that I'm only going to take short positions. That's what I did today, and I want to show you that, right? But that doesn't mean that I'm going to do that every day, right? My position is relatively pretty light from what you guys are used to. I sometimes take $400,000 positions. My position right now is right around $70,000. That's what I left myself with. Why? Well, it's a little bit lighter because, again, market direction is still unclear right now. If we begin to trade above the moving average and begin to make higher highs, then I can justify being more aggressive with my SQQQ position. It all comes in stages. I don't have to be super aggressive early on and hope for this to happen. Please, all I ever say is, again, if you're a bull or you're a bear, just make sure that your position size reflects the certainty of the market's direction. That's all. You want to make sure that you can tolerate worst case scenario And by being more lightly invested, I can tolerate worst case scenario. And that's what I'm really excited for. Bull market or bear market, there's always money to be made. And again, the only people that get burned are those that did not prepare. And a way to prepare is you can stay cash, or you can have a light enough position that you can take advantage of the dip if the dip actually presents itself. So I'm very excited to follow up. I wanted to explain the current CPI data report, where you can get access to, and I wanted to share my thoughts on what I think is to come. I don't think that this was a good CPI data report. I'm already seeing specific news outlets of some people trying to celebrate that inflation is still going down. I think that they're just trying to prolong this little bull run that we've had for the past month. But like we all know, pullbacks will always happen. It's not an if, it's a when. And pullbacks will always happen. The longer that you prolong it, again, the harder that it will correct itself. So I really do appreciate you guys' time. I hope that I earned your thumbs up. Again, I'm not here to trigger any bulls or any bears. Again, I think that there's so much money to be made in this market. My success does not take away from yours, nor vice versa, right? So if you have any questions, again, I'd love to hear you out in any way that you want to reach out to me. If that's via Discord or via Instagram, that's going to be the first or third link in the description down below. I do want to remind you that I do trade live every morning with my Learn Plan Profit group, meaning that they get to see my entries and my exits, and most importantly, hear my thought process behind every trade. They get access to our A to Z video lesson library that's designed for complete beginners. They get access to my daily live trading session. They get access to our private group chat and access to our TechBuds HQ. It's all included. It's a one-time payment. And yes, it is lifetime access. We're running our biggest sale right now. It's $150 off, and it's very simple. Do you want to condense the time that it will take for you to learn everything it is that I know about the market? That's exactly what this offers. It's still going to be challenging, and you're still going to have to learn how to solve problems. But again, would it be of value for you to have access to me and to watch me trade live every day? If so, I have that second link in the description down there for you to $150 off, and you can watch me trade live as soon as tomorrow at market open. I appreciate your time. Hope that we earned a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take it easy, team.